right, good afternoon, everyone. Scott Henderson, shooter. Hey, it's July 8th, 2026, and we're going to take a look at some charts, treasuries, and USJPY, and a number of the indices, and see if we can try and get an idea about where we're going to land the rest of this quarter. Of course, at the end of our presentation, please do review our disclosure. Now, I'm going to start off with the USJPY, and I've got this confluence box. These were the points where they had intervention in the end, and obviously you can see it gets a little reaction. Basically, what they do is to stop the free fall. And as you progress further in time, the first rate hike we had was back in December of 25 for 50 basis points. We had a 3% drawdown for that. Then we had a 25 basis point hike. And I believe that was in June of 26. And we had a 5% drawdown from that. Now, I think we stick with this trend. However, third drives can always overshoot. So, you got Flushing Drive 1, Flushing Drive 2, Flushing Drive 3 could really overshoot. So that 5 is what I kind of see as equality. So my assumption is if we get down there, there's going to be a larger integration than 25 basis points. And if 25 basis points dumped U.S. equities by 5%, we could see 7 to 8%. So the projection based on that trend support, I'm looking at October. So as we approach that date, I'm going to continue to drill down because I just want to have a concept of, when that's going to hit. I think this is a guaranteed event. I think they do hike rates. I think the only reason they haven't hiked rates is because our Fed has been active in their markets to try and prop things up. At some point, there's really not going to be another option besides a rate hike. They're going to need to move or they risk collapse, etc. And if we also look at, I posted a little note on Korea, and they're absolutely going through what I would classify as a liquidation. So, there is a little bit of a spread as far as where we're seeing some risk. And, realize a lot of our financial crises came from Asia, or however that's, there was an event that occurred, and then it was how we had to respond to that, not necessarily where we were in that financial scenario. So when I jump over to the dollar, the dollar to me is bearish equities, but we're not seeing it in price yet. Now, sometimes we have this distorted outcome from what is actually happening underneath the hood. And I think that's kind of the case here because the bond vigilantes are getting very loud again. And when they generally get very loud, it's, usually about the time that something happens. And there's some, I always say that there are a lot of people who are a lot smarter than I am, but I'm smart enough to listen to. And, looking at where we are, I think that dollar bond scenario couples with the US JPY heading into October, I think that's the most likely place for us to have some issues as far as strength or not. Now, my current consensus, and let me jump to the indices as far as the SPY is concerned, I think July should theoretically be a good month. I would think it would be. Historically, it has 85% of the time when we have a weak or negative June, and we kind of had that. Now, when I look at our wave structure, I'm looking at this as wave 1 of an intermediate wave, so I'm projecting wave 2 down here. It might be done, and I think I said that last week. We have pretty cut and dry equality kind of ABC structure there. So, we could just continue to build this out. And we won't have confirmation until we break back above those highs. Once we break back above those highs, these lows become silent, all right? So, my thinking is as long as we don't take out the 698, I think that bullish scenario plays out. We continue to grind higher. Now, we're also going into one reason I have ASML and TSM on is because of earnings. And I've said this before, and I always jinx myself when I say this. I just think there's absolutely no way they can't beat. Now, is it going to be a beat enough where it gets the kind of response I would like? Well, if it does, great. If it doesn't, then I started acquiring a stock that I want to own anyways for that final leg of the build out as far as AI infrastructure is there. So I have a twofold plan. Earnings, and then I want to position in those particular semis, and specifically why ASML and TSM is because of Elon Musk and his factory build. Both of them are going to be involved in that build, and it's going to be very large chunks of money going into their P&L fairly quickly, because obviously he's not going to build that factory. He's going to have third parties and then hire staff to run it, etc. So I think we're heading back towards highs, and I would hope that we take them out by early to mid-July. And when I say early to mid-July, next week or the following week, because frankly, if we don't, I was disappointed that breadth fell off a cliff again. We had 2 days where we had decent breadth. We actually started to expand, and bam, the next day it was gone. I mean, that quick. And that is the first day since March where I saw breadth expanding to the extent where it kind of got me excited. Like, oh, man, I can finally start playing the game again. Because there's a certain box that I really like where I get really motivational and I'm really good because I have the conviction that the flow is going. And that just evaporated the first part of this week. So hopefully that changes. We always have a shot next week and it'll come. But let's jump over to the NASDAQ. Now, the NASDAQ is struggling here a little bit right where we are. Now it looks, whereas last week the S&P looked worse than the NASDAQ, this week the NASDAQ looks worse. And it does not look done back around 670, 680 if it continued to head towards the downside. I don't like to do that very often, but that was the intent there. So I do think the NASDAQ heads a little bit lower. Now, let's look at TLT, completely reversed here. So this was all news. We're going to put in new lows here from where we are. So we get back down about 82.30, 82.40. Then I'll start a position that's roughly right down here at this. I'm looking at this as flushing drive 1, flushing drive 2. 3 does not necessarily need to take that trend line out, but it could. I mean, we could have an overshoot. And there's no distance in time in the way I view Elliott Wave. Either it's going to get a 2 drive, which we've already gotten, or it's going to get the 3rd drive. So right now, based on this rejection, my biased is like 80%. We get the 3rd drive. We test these lows. Now, it may only be by $1, but we're going to test those lows. That's my conviction at this point, based on what I saw. Now, semis continue to be weak. I project that we do pull back to this box. This shelf is a first place of resistance around 560. And I only want names that are aggressive and have not really popped as much as names like SanDisk or like Navidad. Even though they've moved, there's certain names that I want for specific construction reasons in the first phase of this additional build out once we resolve this power issue that we have. So, all right, let me go through some of those names. All right, ASML. My thought was this shelf holds and we head back up towards 21 to 2200 for earnings. My bias has not changed. It's the 15th. That's basically what I think happens. Actually, let me switch to my right chart. I have so many different versions of charts, it's not even funny at this point because I'm testing so much with AI. So there, now we are at the right chart. All right, so obviously, this is my buy box, by the way. This is the automated system. Automated system measures the entire leg. I'm measuring the shorter leg from this trough to this peak. Reason is because it's not broken. We have peaking drive 1, peaking drive 2, peaking drive 3. So this is our corrective leg. So equality should put us back up here at about $2,500, which that's what I'm trying to get a piece of. I'm not trying to get a piece of just earnings. This is a hold for me. TSM, similar scenario, the automated box. Again, we have the 3 drive, peaking drive 1, peaking drive 2, peaking drive 3, and then a corrective leg. Right now, I'm measuring it as a trend extension, right, until we get a corrective leg. So, this grouping might be peaking drive 2, and then we would get another grouping of 2 drives for our peaking drive 3. So, I'm probably shallow on this look here because it looks to me like it's holding up. I'm always conservative. Like, okay, if I'm wrong, what is my low price? So I maybe think 398 would be a deal if it gets down there. But I think we do push 500 at least going into the earnings stage. Okada is, still working. I'm looking at this as peaking drive 1. So I'm thinking we get peaking drive 2 maybe here, peaking drive 3 up here. And that is that would be primary wave, intermediate wave 1. So we'll get an intermediate wave 2, an intermediate wave 3, intermediate wave 4, intermediate 5, and then that will be primary wave 3, which is equal to this 1. So that's the longer scenario if I jump out in time. So again, this is a name that I really like the upside to, the structure. We came out of this base, we have a confirmed low here, right here on this low. Right here. We have a divergent low here. So structurally, to me, it's a perfect setup. We had a reversion to the mean off of our first mound, pulled it all the way back. Then we got that divergence there. Then we had that consolidation box, which is just like perfect, in my view, because you get that kind of consolidation. You know, once you break out of that box, right? Once you've cleared that box, you get a little resistance that tests the high side of it, reject. So you got one rejection, two rejection, and then we blew out. So the question here is, do we get a retrace now, or do we get a little bit of a flag right here at this resistance? And then we continue the breakout. That's the question. So that's the reason I have that piece on there. All right, looking at crowd, hitting just a tad bit of resistance here. So I'm looking at, but again, this is something I want to name a piece in simply because of its AI build. Now, when you go back and look at the weekly, it doesn't look as rough as it does on the monthly. Now we see a clean peaking drive 1, peaking drive 2. So my projection is we get up to about 220 on this leg. And then I decide whether I'm selling covered calls there or not, very much like I did on Z-Stealer. So I had else because I think we're still in this little box related to power, but that's my thought. RBKRK, again, now you'll notice there's an MO here with what I bought. So I see peaking drive 1, I see peaking drive 2, and I'm thinking we're going to get 3. And there's not a lot of room there, but each of these names have some extensive upside based on what I've mapped. So, all right, that's my thought. All right, let's come back to Microsoft, pulling back more than I'd like. We got that nice push, rejected. I'm going to come down to, so what we have here, we don't want to get back below this wick. We get back below this, really 380, right? Then I'll cut and run and buy it back, because then I'm looking at this as an ABC structure to the downside. So one thing that this game I'm playing with AI lets me do is it allows me to have a better plan and vet it. So right now I'm looking at this as an elongated A or an extended A and more of an equal C. So equality on a corrective leg would have been something like that. So I think it's done. However, I've got this little box that the fib tool is telling me is the second standard deviation down from the mean. So it's measuring, where we potentially could go. And, it also will, when it has a box to the upside, it'll measure that as well. Once it's validated, it won't validate till we break above that 400. So structurally, I think we're fine. I just want more of a leg up. And, as far as I'd like to see a little more euphoria there. And we're seeing this. I don't know exactly why we're getting this tailwind in the Mag 7, but I think a lot of it has to do. So I'm seeing this very much like this. So I think we come in and put this 5 in about 402, and then we get a little bit of a pullback. And, that's a spot to add or enter if you haven't. All right, now we highlighted glue, it gets below that 23 buck. Look out, because this is getting to be a very aggressive. Whenever it gets broadened like this, the bias actually, what it's doing is it's measuring the bias to the downside. So we have this period until we break above this really 2507, really till this becomes viable. And once we broke below this shelf, it's not that it died, but it came down and broke it. So it's not as strong as this leg is here. So the way that I see this is, so we got peaking drive 1, peaking drive 2. This was peaking drive 3. This is our corrective group. Well, the question now, is that done or not? And it might not be done. So, we could get, this could be done right here. Very shallow, or, we could pull back to the 382, which is more symmetrical for me, or we could even pull back to this next shelf at 21. And that's where I made the comment below 23, look out below, because that opens Pandora's box to this ledge that I see right here. So that's just my thought. Now, just so I give you a quick fib, where's my fib? Let me come up here and just measure this piece right. Wrong. It'd help if I grabbed the right tool, wouldn't it? All right, so note that we didn't even, we got to the 382, but we didn't get to the 50 fib or the 618 or the 72 fib or 78.6. So it's a very shallow, impulsive leg still, and I don't see that changing. So I'm holding. Whether somebody wants to take profits from 21 is your call in this market. I'm holding though. Let me go back to the upside. Let me go back to the monthly look on this for a second. Because again, this is a name that went through a major correction phase, right? We got this nice consolidation zone, right? We had a confirming low here, right? A divergent low here. So we got that box, solid base box, right? So once we broke out, this was the start of a new mound structure. That means it's going to be 3 primary waves, 1, 3, and 5, right? So in that scenario, this is 1, this is wave 2. Wave 3 measures up to 43 bucks. So I see double the upside here in glue still. I don't like therapeutics, because I've been blindsided too many times when I've liked something because one of their trials goes bad or something. But in this case, I'm chasing this one. All right, WMB, as soon as I got equal, I cut it because it didn't map out what I had thought it would do. So, my thought it would push up to about 83, 84 and be done. Still might do that. The problem was this candle took it out and I decided, okay, I'm at break even, made a couple bucks on it. I closed it. I got no reason why I wanted to hold it because the thesis that I had going into it was invalidated. Next. All right, SP SpaceX. Got to go down to the hourly to take a look at this one. I mean, nice consolidation right here from where we are. I'd rather this held, but again, I don't think it's done anything wrong. The only thing I don't like is we're confirming on RSI. So, we could get a third drive to the low side, and we've gotten all these analyst reports that are calling this thing maybe out to $800. Again, this is a name that I want to hold for obvious reasons because I'm giving Elon a shot. I want a piece on there. I think that we're getting close to that. Once we start that breakout and they start chasing it, calls are really heavy out in October. Heavy. Zscaler finally started to work, and then we got a little bit of a rejection here. However, I still don't think it's done. I think we're heading back up to 172. I think my thesis is pretty solid on Zscaler. Even though we are still, Amazon coming in as a scaler, which, by the way, they have a huge upside simply because of the CapEx in the existing client base. I mean, there's just going to be a huge. I'm even looking at whether I want to put compute on AWS or not. All right. So, and I hate AWS because it's just extremely time consuming to use and you literally need a systems administrator to do anything there simply because of how complex it is. And either you know what you're doing or all you're doing is watching videos trying to figure out how to do it. So, all right, let's take a look at some names. All right, Postal Realty, actually a decent spot. The only thing I don't like is confirming MACD is wide open. So from a fib standpoint, I didn't throw one up there yet. And actually, I'm just now noticing I might not have worked that one up yet. Actually, there might be a few I didn't work out. I think I got sidetracked. All right, so right now we're back around the 382. Equality is going to be back down here around this 23. So we're testing this shelf right here. Put a number up there. I mean, we've held a good spot for it to hold. If it held there and we had a little divergence on RSI and the MACD was crossing, I'd say, yeah, it's worth a shot. That's my 2 cents. All right, run. It's coming out of this. Actually looked pretty good when I looked at it. You have clean divergence here. So you have a confirmed low. Let me just double check and make sure my eye is correct. Yes, we have a confirmed, well, maybe not, right to it, wick to it. Look at how beautiful that is. Now, by the way, a double bottom in a low price relative to RSI. And we got a lower low in RSI here. So technically, this is our confirmed low, but I'll take a double bottom and I'm going to treat it as equals here. So it has the same validity back to the upside. So structurally, the way that you see this here is a trend down. So you have flushing drive 1, 2, 3. You actually have 4, right? So it's really euphoric, right? Now, those like to give us a decent bounce. So the way that I would look at this is I would measure my fib here and say, hey, okay, this is my emotional, this entire emotion from this pump to this dump. And I'd come in and say, okay, well, equality to me is going to be back up here at this 618 at $14 from where we are here. So it's got some upside, but not a lot of upside. But still, it's a nice 20% gain on that box. Now, the projection boxes, I don't have a green projection box here, so the bias is that's still lower, even though we have this divergence here. However, I think once it takes out the body of this candle at roughly 1230, I think you're good to the upside. Now let's look at Generac. Nice divergence down here as well. Kind of got a confirming low, not a lower low in price, but definitely a flush in RSI. Came in and did the confirm, then got a divergent low behind there, right? So that tried the bounce, rejected. That's the only thing I don't like. But looking at the equality look from the corrective leg, you have sort of an extended A, B is shallow, and C is a little more than normal. So it could be done from that aspect. I'm going to come back to the weekly on this one. Automated box is where I'm measuring this. So the deepest retrace box is really maybe around 158 from where we are. This shelf breaks. I wouldn't be holding it through that. I mean, I think we've pretty much wicked down there to it. I mean, we're right at it. I have to take my tool off here so we can see that. Basically, wicked right to it, body held above it. I don't like this candle. Nothing's green here. However, on the daily, we got some green candles, except for it looks more like an an impulse versus an ABC once we go out to that. I'll just map that out so you get a visual. So you had a failed flag here. It's one thing that I catch as I'm looking at it. So you had clean price rejection. So this is coming in. This is like 3. So this probably becomes like an ending diagonal. And then the question becomes does this shelf hold here or not? Or we come back and test this. That's the way I would look at it. Needs to really get back above that 242, 50% of that candle, which is above the body of this candle here. Really needs to. For any bullish buys, the reason is you have this solid ledge that was tested on the way up. Test 1, test 2, test 3, and then we rejected. So we need a body of a candle above that line, really to test longs, I would think. Coming down to RSI, we are bearish here totally. We got 3 drives, peaking drive 1, peaking drive 2, peaking drive 3. So I throw a golden box up there, just measuring this leg. We're right in that retrace box, right? However, the extension box is much deeper, right? Puts us down here. So the extension box would be like right in this range down here. So this would be what I'm putting on the charts now as a second buy box. So that's the extension of where we potentially could go kind of thing. All right, let's take a look at Yo. I actually liked this for a while here, even with this rejected candle. Reason is peaking drive 1, kind of peaking drive 2, peaking drive 3 puts us up about $60, right? But in that sense, when I look at that, peaking drive 1, peaking drive 2, so peaking drive 3 is going to be up here. So this is from what I have measured. Actually, I have it up there already. Sorry. So my thought is we get up around $60, then we get our back test up there. That's the main reason I like this. Just this noise, it's trying to stay above this line here too. Options are also pretty solid on this to the upside. So breaks below 54.60, my confidence weakens. But right now it's like a perfect golden box back test on wave 1. I mean, that really is what that is. So I think it heads to the upside. I'm measuring maybe all the way up to 72 on it. The only reason that thesis breaks is if we close below 52.66. However, the system is measuring 51.46, which is measuring this whole leg here versus this consolidation in this zone here. All right, EWW, Mexico. Got a little pop off of lows. Do have some clean divergence. We'll go back to the weekly on this one. We're out to the weekly, out to the monthly. Okay, so you got a clean, what I'm going to say, it's an impulse, but it looks more like an ABC. But that's all right. Wave 1 often is just an ABC. Or you have, it looks cleaner. Wave 1's longer than it normally would be, and then you get a corrective leg, and then you get another ABC structure in the CFAS on the way up. They tend to hit into resistance, which is this case. We have hit resistance up around 72. If you notice right around that whole channel up here on the top side. So it's got this box right up here that's sitting up here, right? So we got above that. We've cleared that, right? So that should become support. So your support line you want to hold is the body of this candle right here, roughly around 71.78. So you got about $2 lower from where we are. But I'm looking at this as peaking drive 1, peaking drive 2, peaking drive 3. So this is our impulse wave 1, at least internally. This is what I refer to, or is, an intermediate wave, right? Now, note how much more aggressive that measurement is than what I have mapped, simply because now I'm measuring what is equality from wave 1. Now, wave 3 is typically the longest wave. So even that measurement that I just had up there is conservative. So this above this buy box or these targets, T2, T3, etc., it actually has the viability to go much higher. So I actually like EW after I reviewed the timelines on this. I actually like it here. Probably the only thing I would rather have is RSI back around 40 for an entry. But in the meantime, you could just sell some cash secured puts, and if they get put to you, then you started your position that way. I'm not sure what the premiums are. MACD is kind of rolling over. So, that the bias box, the buy box, I would say is very valid. But in this scenario, with how impulsive that is, you might not get it. So I guess it depends on how badly you want to own it here. All right, BE, total rejection. Mapped out that, let me go back to my weekly. I mapped out that head and shoulders, manifesting to some degree. Really don't get concerned. It's got to take out this 228. Body of the candle closes below it. I'd probably be out there. The reason is because it becomes a reversion to the mean candidate once this breaks, right? Which is back down here at 151. That's a little more pain than I want to hold. Market implies pain, which is one reason I haven't increased position size. All the noise that it's echoing. Now I don't want to use the word deafening, because it's not that loud. But clearly, Mr. Market is sending us signals like, hey, maybe I'm not as healthy as you think I am, kind of thing. So it might be a good spot to take some profits. Yeah, I mean, whatever the macro and micro, let's talk about liquidity and flow for a second. Macro, micro, and fundamentals do not matter when liquidity is a problem. So we have to have the flow. In the last year, my bias has moved aggressive. About 70% of my decision now is really based on the flow and what liquidity looks like in the individual names in the sectors. When the sector starts rotating, I want to pay attention. And, even though we had a little pop from Iran and oil, realize oil's target is back down to 45 or 50 bucks once that Iran issue gets resolved. On top of that, we have the largest number of filled tankers at sea right now moving oil out of the straits and in that area, trying to get everybody caught back up. So they basically have run 24/7 as fast as they can, and they're running at full throttle for those deliveries. That's going to wash down into price once it settles. So my assumption is this $72 oil that we saw today is short-lived, and then we head back towards that 45 or 50. That's also going to affect other energy dynamics simply because that cost structure is declined, and a lot of the migration that went away from oil because of the price, secondary energy sources, aka AMTX, BE is an example, even though they're building out a lot for AI. The reality is that a lot of the sources will drift back towards oil as a result of that. So just be conscious of that. If I was holding BE, I'd probably be taking some profits or at least selling covered calls. Or I would even exit my common share position and flip over and sell some cash cleared put, unless there was a tax consequence that I didn't want to take. That would be the way that I would. All right, looking at Planet Labs, I like it right here. I do. The only thing I don't like, we kind of confirmed on this low when you look at the weekly. When you come down to the daily, it doesn't look quite that bad, right? We got our confirmed low here, which is right here, right? We got a little wick divergence, right? Coming back and looking at what held, I'm always looking for my shelves. We've got one nice shelf here. Change the color. I'm going to go up a little bigger so you see it. Make it red there. We got one shelf here, really here, which is right where we tested, right? So we did wick below there here, but we came out of it. Now we're back testing again. Gets below this, we're going to go down here to 20. So obviously, I have more of an interest down there, which is one reason I haven't mapped it, even though I like it. I think it does head maybe to 20 bucks. Especially with weakness we saw today. Today, when I got up this morning, I started looking at stuff, and I'm looking at all the names. I'm looking at the stuff that's rolled over, the stuff that's rolling over, the stuff that ran into a brick wall overhead. I mean, it was just, there were a lot of names, right? And today's trading, rotation was aggressive. I mean, and that makes it challenging because what that's telling us is that there's not a lot of buyers at these levels, and the only option is to pull price lower so we get the buyer. And that's what the market makers are going to do. So looking at the wave count, now I'm looking at this from an ABC standpoint when I look at this and realize a day can really change my mindset. I got really bullish coming into the week and that kind of faded. So if this is an ABC, and I'm going to say if it is an ABC, we probably do something like this because this is clearly an elongated A, shallow B, right? C should be pretty shallow, and this ledge should hold. That would be right here. That should be about what we take out. Now, if we get an equal C, it takes us down to about 16 bucks. Now, we also have another shelf down here. Now, one thing nice about this name is it has clean shelves. Even though they're not equal, they're similar. Symmetry is close. It's good. It's decent. So you can come back in here and really take the body of this candle or even the body of this gap right here. Then you get much more symmetrical as far as the look. So that 1629 looks like a really good spot here as I'm looking at this. Not only that, we kind of have like a mound one. So, just in how corrective legs build, you end up with this flushing drive 1, flushing drive 2 on wave A of a corrective leg, right? Then it flips, right? And then you get peaking drive. You have one here, get 2, maybe we get a 3 to put in our low. So it's, you almost get like this S look and how it corrects. So once we get another flushing drive that rejects, we know that that's the structure that we're in, and there's really only one out, and it's going to be either at 20 bucks or 15.79. That's pretty much right where it's at. Okay, USAR. By the way, that was $1 million analysis. Looking at where, I think the bid here goes back to the same timeline. Picks and shovels are one thing, but are we delivering yet? We have all this stuff happening out in Nevada. All this stuff's going on. So I see an ABC structure right off of this high, and we got that hoopla about what was going on. Got that pop, kind of an equal A and a B, right? So maybe our C is kind of equal, so this shelf down here would be a good spot to hold. I want to go back and see what else is over there on this shelf, just to give me symmetry real quick. This is how my mind always works. So it gets back to right around $16. Looks interesting. However, we really have, it's still confirming to that we really don't have any bullish divergence at all. We have, if anything, bearish divergence that occurred up here. So, we got a confirmed high, divergent high, confirmed high, right? So you could look at this as peaking drive 1 grouping, peaking drive 2 grouping, peaking drive 3, we're done. So if we actually measure it that way, now this is what I do all day when I'm doing charts. I look at the scenarios, the outcomes, and then I decide what I like to, based on that, the history of that particular chart. All right, so we're closing below the 78.6. Now, the challenging part is what the projections are showing me and what that golden box tells me. And one of my rules on a corrective leg is we close on the weekly below the 78.6. It opens up the next golden box as a viable target, which is down here. That will be hit about 70% of the time. So in my mindset, I'm thinking about that when I'm looking at this chart. I'm like, yeah. It looks to me like it's got some downside. I got no divergence. Going back in history, I've got bullish divergence way down here. Notice where it is down here. Way down here. And where's that bot? Right there. Symmetry just seems to work some. All right, AA. I like this. Flagged it. I remember it was Monday night, I think it was. I don't know, it was up till 2 o'clock doing charts. This was one that caught my attention. So main reason is the shelf's holding. Not only that, there was something about Trump and aluminum, right? And we have this, it's held this wick. I mean, it really can come back to this body. If we come back, let's see how far back this line goes where it means something. Actually, quite a ways back. Okay, it's a little deeper right there. Okay, I'm going to leave it right there. Reason is that's got the most confluence. So 41.30 is where I really like it, even though I flagged it. Come down to the 4-hour 2, confirming on this low. It's not done. We got one more. For the life of me, I can't remember why I liked it right there. I think I put it on the accumulate list. All right, so that it comes right to that line equality. Flushing drive 1, even though we didn't confirm, right? Really no divergence. So it's still a down. So we got flushing drive 2 without divergence. Okay. So the bias is 75-80% that we get one more low, maybe around 40. So that's my 2 cents. All right. Anybody have any other questions? NRG. All right, NRG. Let me finish these names. Nice divergence. First thing I see here, I'm on the 4-hour though. Let me go to the weekly. Let me go to the daily. Give me enough time. Clean divergence down here. I don't like that price rejection right there at that shelf. I reject that gap. So that holds. That should become our impulse up. Should be. Those candles look weak to me. And that could just be market sentiment. I mean, just the current conditions that we're in. And it may wane, but structurally, that's where it should head. AI, the projection boxes are projecting that it's kind of builds out a flag still, or a wedge, right? Which still could become bearish. We get into this gap at all, though, you risk is the bottom of the gap. So that's just my 2 cents there. SMR, I haven't been on this one in a while. I've got equality down here at $4, broken this shelf, not closed with a body below it. That's rejecting. Yeah, bias is right here at $7. It's probably going to continue to head a little bit lower. Unfortunately, if we put the right name in there, Clean Spark got to get up and out of this at some point. It's rejecting. It's becoming a leading diagonal. I've got it inside the second buy box. Let me come back here on the daily. Ending diagonal. Shouldn't change the trajectory here to the upside. As long as this 1092 holds, it should be fine. And I believe I had this. I think I pulled it off the accumulate list when I was there in them on Monday. But it's still this. This is just this band. This is another benefactor from the AI infrastructure. Note here we had a confirmed low, right? Or confirming low, and then we had a confirming high here. So this is your band. This is your range, 788 to roughly $19. And it probably will stay in that band for a little while till it has a catalyst or a reason for it to get out. Good spot give it a shot. Still inside the buy box. Nice wick off. Little distorted on the trend support because it literally came below there, but the body held. Where am I at? Let me look at my weekly. Can't see it. 4-hour blasted thing looks like an impulse, and it looks more like a leading diagonal, which can be pretty aggressive. So you can have that total flush that can come in from there. Happens to measure right there. That's your most important spot. That's structurally. That breaks, then this uptrend, it was rejected. However, you still have 3 peaking drives in this. Peaking drive 1, peaking drive 2, peaking drive 3. Would have been nice if it built out a better top, but you have clean price rejection up here. Bias, I'm going to say 60, 70% we come down here still. All right. Rocket Labs, RBLK, LX, Roblox. Outside of RSI, I'm on the 4-hour though. Let me go out to the weekly. Got a lot of upside here. Strong, nice divergence on the weekly. You got it pretty clean. Hold on, I got to put a line up here on this one. I can't see. I started seeing spots about 15 minutes ago. Yes, we got divergence. So your measurement would be, I'm going to assume this is just a consolidation band. So that would mean this is your 1, right? So you're going to get 1, 2, it'll be a shallow 1, but ultimately this is a minor wave coming about like this. So that becomes your 1 on your intermediate wave. So it should step up pretty much just like I have mapped here to the upside. Looks good. Actually, I like it right here. ADSK, I'll actually come back and say one thing. So closes below this 40.32, or really even take this wick here at this low 40.15, then obviously my bias switches to, hey, we're going to test these lows 29. There's not a lot of room that we need to worry about to the downside on that though. ADSK, and this these price increase and this freaking metering change, it's like I blew through my Gemini account this week in about 4 hours, and then they wanted to rebill based on a clock, right? And that is going to drive a lot back to SOD. The problem between now and then is each of these, tech support software apps kind of thing, they need to build out what their AI can do for you without it having to be duplicated for every single client. Like for example, a mailroom. Right? A mailroom does specific things, right? The functions of what AI can help you do right now, every freaking mailroom in America is pretty much going to AI independently to find some solutions for the mailroom. If AskDesk builds in that mailroom feature, unquote, and there is a doctor's type degree in that box for the mailroom, and everything that can functionally work with AI in the mailroom goes into Autodesk, right? Then, obviously their model starts building because their client base now has a reason to stay with them because of that cost differential that the market just happened. I mean, basically, we just had a reality check. You can't spend $400 or $500 billion in CapEx building all this infrastructure and pay $20 a month for the service. It was one of the best seeds I've ever seen planted in tech, because you got millions of people using this stuff at a really low fee. And I'm a good example. I have a lot of things tied to AI, and it's a lot of work backing away from it. So it's like, is it worth that $200 to do that? Is it worth the $300 to do that? Is it worth the $50 to do that? And so far I've said, yeah, it'll take me 16 hours to rebuild that another way. So I'm doing it. And that's what everybody is being forced to decide right now. And that's why you see caps coming out of like Meta as an example, right? How third-party apps are, they're restricting everyone because it's the only way they can manage those costs right out of the chute. Because all of a sudden, when those costs exceed the cost of your tech department, then, hey, the dynamics are going to change. So that's where I think sauce recovers. So I think, that timeline, I can't tell you yet. When I know it, I'll be the first to share. So did we have anything else? Nope. Let me jump over and let's go to chart book. You see my chart book? Somebody give me a 5x5 and say, yup. Oh, beautiful thing. Okay. So this is chart book. Welcome home. All right. So right now we're screening. This is a works in process. What is valid, and there's a lot of pieces that are, but I'm going to stick with, for the time being, until I've fully vetted it and our audits work, right? The basic process, you go to chart book, you can top any of these categories. Those are my top pick, right? Those are the names I want to buy, right? All you have to do is click on one chart, hit tab, and you can scroll through each chart that's in that grouping, right? Hit escape, takes you back out of it. go to the buy box. In other words, these are all named, same scenario, pop it out, where we are in or bouncing off the buy box. It will show wick until we take out the prior lower highs. Once that gets taken out, then it'll come off of that list according to how we're scoring them. And then, of course, once you're in there, you can tab through each chart, right? So you can decide what you want, right? Now, what is solid in the analysis are these particular categories right here, which it really is like a financial back-ended rating. We're scoring it, so we're coming in and we're saying out of the 4 names and financial infrastructure tech name tokens, we have 4 on our priority list, right? Which really is just a watch list for financial infrastructure as far as AI is concerned. This is ranked as the 3rd stock out of 4. So it's not the top stock, it's the 3rd as far as coin. All right. Now, sector health, and this is not sector S&PY, but sector how we've ranked them. So we've broken down all the names into the sector, and it's giving you, what that ranking is. So out of 10, it's an 8.2. So it's viable. That's basically what it's telling you. This when you see the context are blank or pending, that means it requires my effort. To some point, I have to go in and change something. So those are still there because I'm still mapping that a little bit. Now, theme groupings are that labeling that we've done as far as that financial infrastructure, what's actually there. And now this is our initial scoring model. So the tech is leading, it's risk on. Okay. It'll say neutral or risk off when it goes there. So literally you can pop up this chart, come over to this thing, and it says risk on. It's viable if it meets other setup conditions. That's really what the intent here is. Okay, hey, this box, this box, this box, we have 10 out of 10 boxes checked. Hey, I can buy it, and that's really the mindset that we're trying to go through here. Now, the bottom part is still a total works in process. We're finding that's one reason I'm working on all the tools with the chart, because I have to automate a lot of the data that's coming in, because literally to map this the way that I want to, I can't physically do it with a few hundred charts. There's just too many key points. I have to pull it out of automation at some point and then supervise it. And that's really the game plan of where we're going. So let me back out of this. So now the shopping list, these are names right now that I have on my personal buy list that I want to buy, right? That's it. Now the buy box, we're running scans, and actually it still works in I have to supervise it because sometimes it doesn't pick the box. So it's scanning the chart and it's finding where the buy box is, right? And it's saying, yeah, price is inside that box. Sometimes it's wrong. It's just flat out wrong. So that needs to be supervised both by me and you when you're looking at this. The intent here is this is the logical golden box, the first golden box. And realize in the structure of how I map out a mound, you have your motive wave up, right? And you have your corrective leg down. Equal ABC is golden box 1. Okay. An extended ABC structure is golden box 2. An elongated ABC structure is golden box 3. So whenever you're putting a position on based on my thesis around mound theory and Elliott wave, et cetera, fib extensions, how they all interconnect, right? You always want to be conscious that I just might be putting a piece on here and then I'm going to need to add here. And then maybe in 30% of the time, I might need to add again a little bit lower. So that's sort of the mindset that you want to be. Now, top left, if it has a daily chart, you can click up here now to the left, that's been added. Same thing for a weekly chart. If it has a monthly chart, you can click there as well to see that. Again, that's in the top left-hand corner of the section. All right, now you can search any name, and I'm just going to use ARM as an example. So if it's in the system, where the heck that came from, ARM, right? And what it's going to do is show your different chart based on what time frames that chart has. So again, it's going to take you back to the individual chart. Now, our deep dives, which right now I've got one link here, which is probably not hooked up because that's what it's telling me. But our articles will be here, just like they're on Substack, so you'll be able to see them. But for example, if you're looking at ARM and you do the search just for ARM, right? If it has a deep dive report on it, it will be here as well, right? If there's an article that's written about that, it'll be here as well. What I'm trying to do is get to a point where you have a place to come search for a chart when you want to see it at any time, and it's fairly accurate. And what I'm saying here is the weeklies will be updated once a week. Dailies will be periodic. based on the names, whether or not they're ranked as a buy or not, or accumulate, etc. So it's not going to be every chart on the daily is going to be updated, but the weeklies will be done at least once a week, and then the monthly charts will be updated once a month. And then these break down basically everything that's at the top here, as far as shopping lists. Now, I've also added the punch card stocks here, Kirk's babies that are there, and I mapped them all, whether they were an interest a buy or not. Now, we do have a more extensive analysis on this because these particular stocks I mapped differently than I was doing the other ones because this is the format that we want to get to. So I'm creating one chart for machine learning, which has a lot of noise on there. You guys saw those charts, noisy. Well, actually, you know what? Let me just go show you what a noisy chart looks like. So, as far as, this is everything that's on an AI chart. Can you guys see that? Somebody give me a 5x5. Yeah, I see it. All right. So that tells us everything. That's got the alerts in there. It maps the mound structure, time frame. It's stepping down waves. It's measuring the trough and peak to every single wave. We've got alerts on the EMAs regarding the lazy EMA that's in there. And those alerts are coming back to us. We get a daily export, or actually we can export it anytime we want to. We get a little inbox inside HELOP OS that says, hey, we have this many alerts that have triggered for these names. Now AI reviews it, and then it's going to go back and update those that end up being delivered into Chartbook. So there's a lot of good stuff that's working there because I like I don't know, I'm just having fun with the automation. So, all right, now watch list is going to it was really large because I let the system run on the watch list, and I don't want it being on my watch list or your watch list unless it's close to being a box. There's a reason why I'm watching, right? It's in the box. Reason this isn't in an accumulate is because we hit 50% of the candle on the breakout. So that it's not invalidated. It still has a confirmed low and a divergent low. But this weakness means I'm not watching it right now. Next week, when we look at the chart, then we're going to decide whether we keep it there or we remove it. So if it's on the watch list, that means I'm watching it because it could be a buy very soon. Outside of that, other names will now totally be enlisted. That just means the chart is there, right? But it doesn't necessarily, it's just we're tracking it for the purposes of data. And obviously it's there if you want to look at the chart. Like, for example, you decide you want to look at Meta. Obviously, you got a chart on Meta. That will be pulled automatically once a week for the weekly. The daily will only be done if for some reason it gets flagged to me to review. Outside of that, I'm not going to look at that until the system flags me or you guys ask me to look at it. Because what I'm trying to do is eliminate looking at all these charts that aren't ready. I want to be looking and focused totally on charts that are ready for us to buy. Now, hold is simply going to be names that if you own them, you want to hold them. There's a number of different reasons why, but ultimately that's the idea there. Right? Part of the reason is because we're in a solid impulse wave. We're going to continue for wave 5. There's absolutely no reason not to hold this with this kind of look. AMAT, we got a nice little correction. It's the buy down a little bit lower. Amazon, actually we should be adding to Amazon if you don't have a position because I think Amazon does really well. This little pullback, I think was kind of a gift, right? Also, if I'm looking at the structure, we had a completed mound structure over here, 3 drives to a corrective leg, drive 1. We're putting in drive 2. It could be an ending diagonal because this was a little aggressive, but that pullback also took away that noise and the shelf kind of held, right? So this first breakout candle held before we got that overshoot, right? So kind of a confirming high and then a divergent high, and we sort of held in between those. I can't draw a line on this to be specific. Now, if you want to pop the chart out to full screen, all you gotta do is click on it. Pops to full screen. You hit escape and you want to pop out the analysis so it's not on the right-hand side of your screen. All you have to do is click on it and it pops out. I was trying to make that more functional, so it was usable, right? Now, most of these, the rotation bucket is not touched yet. That was just the basic we built. So when we start seeing rotation, we're going to be pulling data from different sources. So we see rotation and then we'll have a thesis on that rotation. So the idea is we see it soon and that rotation. So when we rotate, for example, out of semis, where are we going? Well, those will end up, there'll be another box that comes up here and it'll say rotation. It's not here there yet. It's built, but it's not there yet. It'll be coming. And then we have all the S&P sectors here. that are listed, so you can look it up by those. Now, so if there's anything in finance, it'll pull up any names by the S&P sector if you want to look at that. That should be accurate. Now, as far as the sections, this is stock, and it's not mapped right now, but it will come up at a later date. All right, the theme grouping is what we broke down. So this is based on my all domain thesis. Really that AI build, it's the largest industrial revolution that mankind has seen, right? And we've broken these all down into all categories that apply for that. Right, that's what really that breaks down, and those should be all searchable. And now HELOC tiers. Tier 1 are your best stock, right? And we got something blocked here. All I knew there was more than that. All right, so the tier 1 stocks. These are the stocks that first choice. If you can own them, etc. Right, and right now I can say that it's not populating, so I need to go back, add that to my to-do list. Tier 2 obviously is going to be tier 2 stock. Tier 3 is third tier. Now, Tier 3 are FOMO stock, and quite often they should be a little riskier just because they have huge ranges. So and if you don't like risk, I'd probably avoid tier 3 as far as those names that are there. So all right, well, let me jump. Does anyone have any questions about chart? Hopefully that was helpful. Perfect. Yeah, we'll have. I haven't done the updated video either, simply because I'm not far enough into it. Once I've got most of the functions that I'm playing with right now working, then I'll do another video, and then we'll probably, even for a little while, once it's functioning, because I haven't really launched it publicly, because there's going to be a public version. You guys will have access to it regardless. And then there's going to be just a slimmer version that's just Chartbook, which will be launched like any other kind of that type of thing. And once that's launched, I'll probably be doing weekly how-to videos, Q&A kind of thing to try and pump that a little bit more, because I do think it's a fantastic tool, or at least that's my intent of what I want to make it. So fantastic. All right, with that, without further ado, we're going to call it a night. Great trading until next time, guys, gals.